After months of protracted talks, Egypt has finally sealed a deal with the International Monetary Fund, which is seen as crucial for restoring investor confidence in an economy that has been hobbled by the last 2 years by a foreign currency shortage. The IMF announced it had upped its loan from $3 billion to $8 billion, with the likelihood of the funding reaching $9.2 billion from an additional IMF resilience and sustainability facility.
In the context of significant macroeconomic challenges that have become more complex to manage, with the impact of the recent conflict in Gaza on tourism and Suez Canal receipts, we have also considered the authorities' request for an augmentation of the IMF support to Egypt. The authorities have showed a strong commitment to act promptly on all the critical aspects of their economic reform program supported by the IMF.
The long-sought agreement was signed Wednesday after the Egyptian government floated the local currency, a move that saw the pound drop to around 49.5 to the dollar, after the central bank had held the currency at just under 31 pounds to the dollar for about a year. The government also hiked interest rates by 600 basis points and launched certificates of deposits with a high 30% yield to create demand for the local currency.
This agreement comes within our comprehensive economic restructuring program. Our economic program is targeting rebuilding our foreign currency reserves, reducing public and foreign debt, increase economic growth rates, cut down inflation, and create jobs.
Since early 2022, when the foreign currency shortage worsened, the pound has now lost more than 2/3 of its value against the dollar in a series of staggered devaluations. The foreign currency shortage has curbed local business activity and led to backlogs at ports and delays in commodity payments. Remittances from Egyptians working abroad, the country's top single source of foreign currency, slowed sharply last year, amid expectations that the pound would fall. Experts believe these developments have been timely, especially after Egypt delayed devaluating its currency for months as it feared a public backlash.
It was the perfect opportunity, especially after announcing the UAE's investment project that will bring in $35 billion in 2 months and $150 billion through the duration of the project. This investment has provided the needed reserves to go ahead with a delayed devaluation, hoping it will undo the forex black market and stabilize the economy.
The shot in the arm would also allow the government to clear a backlog of around $7 billion, pay off its foreign debt for the fiscal year, as well as push inflation rates down to a single digit from the current 30% in the medium term. Allowing the local currency to have a flexible exchange rate that's determined by market forces has been one of the main conditions by the IMF. But experts say that authorities need to initiate more measures to address the country's economic challenges.
It's essential that any revenue would be spent on raw materials and means of production and avoid costly non-essential projects like infrastructure. We have to use the cash inflows to build manufacturing and industrial projects that increase our exports revenue. It's essential we spend wisely this time to avoid a repeat of hard currency shortage and return to this vicious cycle.
Meanwhile, officials have announced a set of social security initiatives as well as salary and pension raises that are being rolled out from this month to cushion the predominantly poor population from the impact of devaluation. But this is just the beginning. According to the Prime Minister, the $8 billion IMF loan would unlock over double this amount from the European Union, the World Bank, and international partners. This is Yes Hakim for CGTN, Cairo, Egypt.
And Yasser Kim is now joining us, in fact, from Cairo with more data on arguably one of the week's big stories. Yasser, there have been a lot of chatter floating around about potential credit lines coming in from Saudi Arabia, in addition to all the other credit lines that we've seen coming in from the UAE and the IMF. Do we have any more details on
that? Details have not yet been released, but we know that Saudi Arabia is interested in supporting Egypt, not maybe in the form of a loan or a credit line, but just like the United Arab Emirates did last week, which is going through a major investment opportunity. You know, the UAE went in with like $35 billion up front for the project of Ras Al Hikmah, and is expected to yield around $150 billion as it goes on. It's a huge, huge amount. And I think what we know is that Saudi Arabia has submitted an offer for a similar area, but in Sharm el-Sheikh. You know, the Ras Al Hikmah project that has started this whole issue of the devaluation and the IMF loan is a piece of land in north coast of the Mediterranean Sea. Saudi Arabia is looking at the other side of the Red Sea, at the Sharm el-Sheikh, also a big plot of land to build a city there, a huge, probably touristic city that would link Sharm el-Sheikh to Jeddah, which is just a few hours away by sea. So this is what we know more so far about the Saudi links to the offer now.
Of course, and at Jeddah at this point in time is where I believe the Jeddah Grand Prix will be taking place this weekend. Practice should be on at the moment. But what about tax incentives? Because this is a massive amount of money that we're talking about. $35 billion coming in from the United Arab Emirates via ADQ. Did they get any tax incentives to make this investment?
We haven't been given any details about the contract itself, but obviously with such a big amount of money and also at this critical time, I think there were incentives being put in, whether in tax incentives or raw material or any kind of facilities to help the project kick off as quickly as possible and to encourage the Emirati investors to enter this project with their companies and with their investment portfolio. So I think there is something in the papers there, but we have not been informed about it.
Indeed, it'll certainly be an interesting story to follow up on. The Prime Minister speaking earlier today also said the country is expecting additional credit lines beyond what has been announced so far, roughly $40 billion, between the extra $5 billion from the IMF and the $35 billion coming in from ADQ. Do we know what other credit lines and investments might be in the pipeline?
Yes, the Minister of Finance just a few hours ago released a statement saying that he expects, or Egypt expects, $20 billion of credit lines to be coming up very soon. 3.5 billion of these dollars will be in the form of investments. And what we know from the Prime Minister earlier is that the World Bank, the European Union, are two entities that have promised to unlock funds once the IMF loan has been signed, as well as international partners. And I think international partners means basically Saudi Arabia, Qatar, and maybe another Gulf nation like Kuwait or Bahrain. But those are probably basically the main donors to Egypt that we expect to begin their credit line or the influx of more investments or more hard currency to Egypt in the next few weeks, once the IMF loan has been signed officially, and that will be at the end of February.
Indeed. So as part of this latest staff-level agreement to the IMF, looking at the statement that was released, the fund says that Egypt also agreed to rationalize tax exemptions and mobilize additional tax revenues. Do you have any more details on what sort of tax changes that businesses and households can expect?
Well, there was the issue of preferential taxes which have been given to the state-owned companies. And the private sector and even the IMF have been complaining that this really is against competition and it gives preferential advantage to state-owned companies in the market against the private sector. And the Minister of Finance also said that this will be abolished and will be deleted completely from the plan, and that all sides will have an even competition or even level. This is one side. Another side is that he also announced that there will be a new income tax law that will be released very soon, and this will help also to be discussed with the private sector. He said before the draft is approved by the government, so he's trying to appease the private sector in this regard to attract more foreign investments. We also have a big crackdown on the informal market or the ghost economy, which is as big as the formal economy in Egypt and which means that there is a lot of billions of dollars in tax evasions because of the ghost economy or the informal economy. And the government is also trying with the central bank and the financial sector to try to create some kind of inclusion or merge the economies together. And this has been going on for a few years, and I think they will try to also speed up the process, because this will mean more income for the government from taxes, as well as the financial inclusion will mean more income also for the financial sector. So these are basically the main points that the government has touched upon concerning taxes and try to increase tax revenue for the state budget.